Paul Christopher from Wells Fargo Advisors says there's not one, but two recoveries happening in Europe. He's here to tell us what they are. Welcome, Paul.
Thank you.
All right, so tell me what's going on in Europe. What are the two recoveries?
Well, first of all, it's political. The European Central Bank has taken the tail risk off the table, we think, and now people have more confidence in policymakers in the Eurozone. The second recovery is really economic in nature. We weren't really expecting Europe to pop out of its 6-quarter-long recession until the end of the year, but it's turned out to happen at mid-year. That's been a good thing for investors.
So stocks have been moving up in Europe over the past year. Where is the money flowing? Is it flowing to Germany or Greece?
At first, it was going into Germany when you first had the political recovery begin late last year. But since the beginning of this year, the money has really flowed a lot more into Greece, Ireland, Spain, and Italy.
And what is the state of Southern Europe? If the money is flowing down there, what's going on? We heard such dire predictions not too long ago,
right.
And every now and then something pops up, whether it be in Cyprus or Greece and Italy, that scares people and causes a sell-off in the market.
Yeah, but they've taken the tail risk off the table now. So these markets will gradually trend higher, and in the meantime, those political disruptions or economic disruptions will be buying opportunities.
So money is heading into Europe. What about European banks? Are they safe and are they lending?
Yes, they're safe. No, they're not lending yet. Moreover, they're facing some asset quality reviews from the European Central Bank's regulators, and they, of course, have to raise capital to meet Basel III standards.
So someone should avoid European banks?
We would avoid European, especially bank debt, at this particular point in time. Right?
So where would you put your money? What's the best way to make money off Europe? Which funds, which stocks, which bonds?
Well, look, Europe, the main realization we came to going to Europe was that Europe is just this great interconnected production and assembly process with Germany at the heart. So you could buy Sweden or you could buy Poland, but those are just going to be assembly spots for the German manufacturing machine. So we would rather buy Germany and some of the northern countries, the Netherlands or Belgium, for instance. They're larger, they're more liquid. You're not so likely to get a big concentration in banks or just a few stocks. That's how we would play Europe.
And when you say buy the country, are you using an ETF, a fund, or are you going in and buying, Siemens or a German industrial manufacturer like them?
All of the above. A lot of retail clients prefer the ETF route. It's a little bit cheaper. There are also mutual funds and managed solutions. But of course, you'll find these ADRs listed here in the U.S. for some of the big companies.
All right. Thanks a lot, Paul.
All right. Thank you.
And thank you for watching The Street.